Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
The Taiwanese index is down 1.5%. The Hang Seng is down almost 1.75%.
Nasdaq down 1.6%. S&P down about 1.2% as well.
We will do in the quarter 4 about 1,700 crores so that we can take up the quarterly number to about 4,100 crores.
90% of the respondents expecting the MPC to hold steady despite having the room to cut.
We don't have anything in writing that we are out of the race.
Nifty is down about 50, 60 points lower. The Nifty Bank is down about 40.
Near-term outlook suggests that food supply prospects remain bright on the back of healthy Kharif production.
It's been a down day so far. In fact, the Nifty, as we speak, is just about holding on to that 25,500 mark.
All rate and TRIPS rate have fallen way below the repo rate.
Liquidity is something that is our duty to provide.
We've definitely been beneficiaries of a lower interest rate environment.
Is the lowest January total since Challenger began tracking this metric in 2009.
Event-heavy week and markets after multiple updates where we actually saw the Nifty move higher significantly post the trade deal announcement has actually grinded down lower.
Well, that is the day so far. And, you know, the global screen was red. And the question that we put out in the morning was, can the market here outperform? It can't go in the other direction, but can it outperform? And it is outperforming. There is no doubt. We're down about 30 points. So it's a pretty flat day. And you woke up with absolutely, a rout as far as global markets are concerned. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Afternoon.
Aye, and Asia has closed down with a cut of more than about 1.5% for the Kospi, for the Hang Seng. Europe right now is in the red, but the cuts are not deep. We've got a cut of about 0.5% on the CAC, the DAX. FTSE is also slid close to about 0.4%. The DAX is mildly in the red. And the Dow Futures is on the flatter side. But the problem is IT. The Nifty IT index is now down close to about 2%. And week to date, the sell-off has extended itself to a 7% decline on the Nifty IT.
120 minutes, guys. Going to be into the weekend. Where's the excitement? Come on, let's go. And the markets as well.
120.
120 minutes, right? I mean, you're here for ERT, I hope.
Yeah.
So, I mean, I'm just give and take a little 90 to 120 minutes. You better be there for ERT, given the kind of tech route that we've had. But I think the biggest positive today is the breadth of the market. When we started off, when we were doing that morning check with regard to the number of stocks advancing, it was 600, 650, 700. And I was saying by the end of today, we go home with 1,200 stocks will be good. A lot of people messaged me back. That's why I realized that I actually said that. And currently, it's around 1,050. So that's good news. And, the pulse of the market you're getting by looking at stocks like, say, Keynes. The numbers are very disappointing. No two ways about it. There are plenty of things to point out there, whether it was the numbers, whether it was with regard to the working capital cycle. Take a look at the stock. It's up 3% as we speak. It's up close to 8% from the low point of the day. It went into its numbers weak, yes. But on another day, that stock could have easily been down as we speak. But the street is willing to look ahead, give it a chance and say quarter 4, they promised 1,700 crores. Let's go by that. So they've bought into that clarification. I think that's giving you a sense in terms of the market mode. India is outperforming today. India has outperformed this week. And hopefully we continue that kind of outperformance.
Nigel, I think I'm just looking at the Keynes intraday. The move started at about 1 o'clock. The call was at about 1 o'clock. So I'm just wondering, have they said anything apart from what they told us in the morning on the call? Because it was at 3,500 at 1 o'clock and now at about 3,700. So like kind of vertical move after that. So we'll try and see because the FY26 margins, revenue, etc. They put out when we spoke with them earlier in the morning. Well, let's just quickly run you through what's lined up here on the program. So MPC, of course, absolutely in line. And we'll get you some details there. Nifty is, of course, around 25,600 as we speak. ITC, big correction from the highs. It's up about 4.5%, And that's a Nifty heavyweight. It's pulling its weight if you look at the contribution to the Nifty. And it's not just ITC, but Godfrey Phillips as well. So coming up, more details there in terms of what's happening. Technology is the other story. IT index, just a washout with this week in that sense. So that is the other bit which we will discuss in some detail as we have through the course of the last few trading sessions now. The small cap index has also recovered. 2:1 still declines to advances ratio, but much better than the morning. Nykaa is the other one. Strong positive momentum, of course, after the numbers which came through. Well, LIC is the other one. Lots of stuff, right? LIC is the other one. Stocks up 8%, but there is, niggling aspects in the result, which Yash will address in just a bit from now. MRF, of course, strong numbers. Stocks up 5%. So it's a packed next 1 hour coming up. How should you position yourself in the last hour? That's the question. Mitesh is with us with exactly that. Mitesh, good afternoon. Good to have you here. What should one do? What's the advice?
Yeah. So I think, Prashant, I would understand that the market hasn't broken 25,500. I talked about buying around those levels. We kind of managed to hold 25,492 being the low, that level, and bounce back. And there's no sign of a strong reversal on the intraday charts, but this bounce back means that, as I said, there's a good chance that we could test 25,800. Now, on the stock side, Prestige is a buy. Prestige is a buy with a stop at about 1520 or targets of around 1600. And Siemens had a breakout yesterday. Looks like day before yesterday. Looks like a pullback going on over here. So good levels to enter. Keep a stop below 31.35 and then look for target of around 3,300.
Thank you very much for that. ITC, Godfrey Phillips zooming in trade as sources say that the higher price cigarette packs have been introduced in the market. Mangalam joins in with more on this story and what it means for the stock.
Well, ITC is the top Nifty gainer, and Godfrey Phillips too is gaining in double digits, as we understand that, the higher price cigarette packs have now been introduced in the market. Remember, on Jan 1 itself, when there was a government notification that came in of 40% GST and substantially higher excise duty on tobacco with effect from Feb 1st, had these stocks under pressure all of January. The street was, expecting a price hike to the tune of around 15 to 30%, in some cases even 40% to come by for the companies to mitigate the impact of this higher tax. However, the street was awaiting any sort of clarity that came by post-budget as well, and there were no tweaks. So which is why now the companies have gone ahead and introduced these higher priced variants to their supply chain. In fact, I was, accessing some of the products coming in from a few of the companies. So Godfrey's 97mm pack now is at 300 rupees versus 240 rupees a pack. 25% hike is what it is. And CNBC-TV18 has reached out to the companies as well. We are awaiting their detailed response on the quantum, the nature and the structure of the price hike. But the price hikes have been taken. These stocks are flying on the back of that. Though, two important things to note. Will there be a volume hit because of these higher prices? And do these higher prices cover the entire extent of the tax hike or not? Because if they don't, then there could be a margin hit to these companies' next few quarters' earnings as well.
Thank you very much for that. Mehraboon Irani is now joining in. Mehraboon, before we get chatting about ITC and your take on the story, what's your view on the market now? And how have you analyzed the moves that we've seen over the last couple of days?
The view has been quite consistent. I think let's understand one thing, that what India as a market has undergone. We have not only underperformed absolute basis, but look at the way the investors have struggled. They have not seen money being made last year. They moved from secondary market, parked their money in the IPO market. 70-75% of the IPOs are giving them negative returns. Those stocks are now stuck in the demat accounts. Then as a late Latif, they came and bought into precious metals, and they came off sharply from the highs just a day before the budget. And then there was a whammy of the hike in futures and options, STT. Even if the investors were not too concerned about that, the mood suddenly became negative. Thanks to Donald Trump and Narendra Modi's trade policy, the mood became a little bit better. But check up yourself. I think I would say that we are right now in a revulsion period in the Indian equities outside the Nifty, where blood has started being seen on the street, and possibly this could increase over the next 1 to 3 months, God forbid. But that, I'm quite confident, will provide a great opportunity to investors to identify good quality stocks where there are not any takers, supply is continuing, demand is not there. You will get it a begging valuations. Go and pick them, and just a change of sentiment, you call it, or a turn in the stock price, and you will make a quick 20, 30, 40, 50% returns from the lower base in quite a few decent quality stocks in the second half of 2026. I stand quite, correct me if I go wrong, maybe 6 or 8, 9 months later, if and when we talk to each other on the channel.
Right. Meribun, you began by saying this downdrift perhaps continues for the next 2-3 months. So you expect pressure broadly to continue, broader markets.
Prashant,
that's the view?
100% yes. I think it always happens. I call it a revolution period. The point is that not many takers...
My only question was when you say...
when they sell...
No, my only question was when you said, right, I mean, you can make... Aren't you kind of sort of then playing against the... those quick 20-30% can happen, but if the broad trend is lower, as you say, then you kind of sort of, in a way, if that is the view, then you're picking pennies, as so to speak, in front of a steamroller. I mean, if the trend is lower, which is what you began by saying, so how does one reconcile that? Or should one wait for market to kind of sort of settle down a little bit?
No, I will answer that question. Prashant, you have spent quite a few years in the market, and so have I. I think there is an element called impact cost, which not many understand. The impact cost is when you are selling a 10, 20, 30,000 shares only, a PMS house sells or big investor sells, and there are not many takers. The stock on just a small volume of 20, 30,000 shares falls by 5, 7, 10%. And that is because the market is too shallow. 95% of stocks listed on the markets cannot take this volume in a bad market. And then you get those stocks at very attractive valuations, go and do a possible SIP. Like if I want to buy a particular stock, I buy 10, 15% right now, and maybe the balance 75, 80% will follow over the next 10, 15, 20 days, or maybe over the next 2, 3 months. And then I wait for the tide to turn. When the tide turns, I promise you I'm going to make good money. That is what investors need to do. Just don't shun the market. Look at the stocks which you like and start picking them up in small lots at the moment. If there is some more blood coming, then you will get it. Maybe it's lower valuation or slightly higher valuation. But the tide is not going to possibly turn immediately. But as and when it turns, there is decent amount to be made because quite a few stocks have taken a hit of 40, 50, 60% from their highs and even more. So there is an opportunity coming. I'm not saying you're going to make money overnight, but money certainly will be made. And my guess is it's coming in the second half of 2026, maybe with some more blood flowing over the next 1 to 3 months. That's exactly what I meant.
Got it. All right, Meribun, stay with us. Mangalam is back with us first to tell us about Nykaa. The numbers look quite good. Brokerages as well are quite impressed with that. Mangalam, run us through the fine print.
But it's a solid performance that came in from Nykaa. 13th quarter of mid-20s revenue growth and the highest ever EBITDA margin that the company had posted. Remember, we knew their top line and the GMV values from the company's third quarter update already. So the room for surprise was on the EBITDA, and there was a massive upbeat out there as well. So 27% growth in the beauty GMV and 31% growth in the fashion GMV led to a 27% growth in their overall revenue. But the EBITDA of the company grew 63%, which implies a margin expansion of nearly 200 basis points from 6.2% all the way up to 8%. The net profit, which nearly moved about 160% from 26 rupees all the way up to 68 crore rupees. Remember, this has an element of an exceptional of 10 crores as well. You add that back, the net profit actually is around 78 crore rupees. Beauty segment, 27% revenue growth, 70% operating performance growth. Fashion as well showed an 18% revenue growth and on the verge of break-even, as the company had earlier guided for towards the end of this financial year. They will be breaking even, and all their other segments as well, like the e-superstore, Nykaa, Man, etc., all of them doing extremely well. The standout performer for them this time around was the Nykaa's own brands, or House of Nykaa, which saw big growth coming in brands like Dot & Key, K-Beauty and the likes.
Right, Mangalam, thanks so much for that. That's another stock that's clearly building on to some strong gains. Meribun, good to speak to you after a while. Your view on Nykaa, it's been a flip-flop. A lot of excitement earlier, then the stock pulled back. Now these numbers look good. Some brokerages as well, quite impressed. The stock is gaining. Buy into it or stay away?
No, honestly, I'm not tracking it at all. I think I was not very positive on the stock when it got very high valuations, and since then I've never looked at it again. Admit it.
Okay, all right. What about the EMS plays, Meribun? Any view on the stocks? They were the stocks that people really loved in the last 12 to around 18 months. And then they've corrected 10, 20, 30%, 35% as well in some cases. Any of them, find a mention for you? And Keynes, we had the management earlier today. They clarified that Q3 was a washout, which actually sell-side analysts were quite disappointed on. No alert, no kind of heads up given out there. But they're promising Q4 is going to be a star. Your view?
Honestly, I think this particular space is definitely interesting. But what had put me off, and I was quite vocal about it on your channel, was the valuations. There was a Pied Pipers who came and spoke about quite a few stocks in the EMS space. And they were given valuations, I think, which possibly you will see the same price maybe 5, 6, 7, 8 years later. Now that they've corrected, the question is it still value for money? And I feel we are still some time away from that. As a space, and considering that there were some proposals in the budget which are positive for the space, I certainly like the space. But even now, after the correction, none of the stocks in the space merit attention from an investment angle at the moment. But certainly a space which will do well over the time to come. The point was the valuation was too steep. It's corrected. People are getting attracted to it. Maybe there could be an opportunity here and there. But I still feel the valuations are a little bit steep, not too comfortable to go and park in money in this little bit of dirty environment in the market at the moment.
The Nifty IT index, though it's corrected quite sharply, is still about 15% away from its 52-week low at the index level. Mehrbun, do we get there? I mean, which camp are you on when it comes to the Indian IT space? The bearish camp, which believes there is going to be valuation pressure, more earnings downside, or do you think the fears are overblown, the fundamentals are fine, and at some point, stocks will be attractive?
I think I have answered this before also. Over the last 2 years, disclosure, I'm not owning a single IT stock. And despite the sharp fall in the price, I'm not enthused to put in any money in this particular space at the moment. We have to understand and accept that we have been a little bit backward in introducing new things as far as the space goes. Not many things have been done. The question is, are these companies good? Answer is yes. Is the balance sheet good? Answer is yes. But where is the trigger for me to go and buy? Just because the stocks have come down does not merit investment necessarily. There could be value ultimately at the end of it all, because 10 out of 10 voices on the street are negative right now. And when that happens, some value emerges. I'm not disputing it, but I personally am not too enthused. I've been negative on the space for quite some time right now. And the only thing which is attracting me is that everybody now on the street is negative. So somewhere there will be an opportunity coming. But as of now, not too enthused to either recommend or to buy.
Okay. All right. Quick word on MRF. The stock, because of its size, it's moved 10,000 rupees in a single day, up close to 9%. Numbers look quite good. What's your view?
Brilliant numbers. I would say about 110, 120% improvement in consolidated net profit, operating profit up nearly 70%. But if you compare it year on year, we also have to accept one thing, Nigel, that last year, the same quarter, October to December, was a tough quarter because of increase in raw material prices. And that's why you are seeing, well, the revenue growth is 15%, operating profit is up 70%. Now, definitely you can commend the management, but as a valuation, I think it always enjoys premium valuations. There is a strong brand they have, a very solid balance sheet, a very old company, never had any problems of any debt. So it always gets a premium valuation. Now, considering that if you want to take an exposure in the auto sector or related to auto sector, I think MRF would not be a bad bet. It would be a decent bet if you ask me. The stock had corrected well enough, and I'm quite sure the market would be enthused with the numbers which were just announced an hour and a half ago. But whatever be the right now for the price after this results have been announced, I think it would not be a bad bet to go and put in some money if you want to park yourself in the auto space or auto NCDD space or the tire space.
Okay, all right. Mehrbun, this is, we just want to put out a story. Stay with us. Sources tell CNBC-TV18 that FMC Corporation, which is a global company, their India commercial business is drawing strong strategic interest. The fact that the India business is on the block is known, but Rachna is picking up information about who could be interested parties, and there are more than a few listed entities. Rachna, over to you.
That's correct. Sources have told CNBC-TV18 that the race to acquire FMC Corporation's India commercial business is gathering pace, with multiple Indian strategic players evaluating the asset. Now, people familiar with the matter say that UPL, Dhanuka Agritech, Coromandel International and Crystal Crop Protection are likely to be interested in the India business of this American company, with more strategic players expected to join the process as it moves forward. Now, sources also indicate that the deal value could be around $450 million. This is after the write-downs FMC took as a part of preparing for this asset for sale. However, the final valuation, bid structure and transaction format are still being worked out. Now, FMC's India business, which is on the block, includes branded crop protection products, a pan-India sales and distribution network and long-standing relationship with the distributors and farmers, making it a strategically attractive asset for all the companies that we just mentioned who will be looking to scale up quickly. Now, FMC has already classified the India unit as held for sale in its FY25 accounts, formally signaling its intent to exit the commercial operations in the country. Now, the company has also said that the India sale is a part of its 2026 operational priorities aimed at strengthening the balance sheet. FMC is targeting $1 billion reduction in debt through a combination of asset sales and licensing agreements, while sharpening focus on its core global portfolio. CNBC-TV18 has reached out to all the companies mentioned, and we are yet to receive a response.
Rachna, thank you very much for that. I mean, it's not market moving yet, but it's not a small number. I mean, at least the deal value, which is pegged, and it depends on, the bids which come in, etc., but $450 million. So we will see who sort of does put in the bids. But we've reached out to everyone, and as Rachna said, we've not heard anything back in that sense. Now, Mehraboon, before we wrap, anything open-ended question? You want to just leave us with the idea or the construct of an idea?
Well, I would say we should all be waiting for opportunities, and the opportunities have started coming in. And in fact, as I mentioned earlier, Prashant, I'll make it very clear, I started nibbling at stocks. There are spaces which I just want to avoid, especially most of this recently listed IPOs, the new technology business and all this type of things, because there was a fad over there. I'm not saying they're bad businesses, but the point is the valuations, there is no comfort. But there are opportunities here and there. I think it starts with banking and financials. Like in banking, for example, there are names which may not be the most attractive names for people, but there is too much of value. A name like a Jammu and Kashmir Bank, they just need to raise capital and the stock will be higher, I'm quite sure about it. Or a Karur Vaishya Bank, a Bank of Maharashtra. If you look at this stocks right now, I think they have corrected a little bit. And I think the downside is not there, if you ask me. And ultimately, there will be an upside. But as and when the market tide turns, the opportunities also will change. So there are stocks which are possibly slightly higher beta, which may be a little bit worrying because people are right now seeing blood on their portfolio. It's not easy to ask them to go and buy. But there are those names like a Bank of Maharashtra or a Karur Vaishya or Jammu Kashmir Bank type of thing in the banking space where I feel there's a decent opportunity. Go and buy them. Do an SIP for the next 1 to 3 months or go and buy them lump sum. You won't lose money and certainly there will be an upside. But there will be many stocks which will outperform this fairly steady stocks by a wide margin as and when the tide turns. So if you have names in your which on your buying list, and if you feel that for some rhyme or reason, because of the lack of depth in the counter and some selling happening and the impact cost taking place and the stock comes down sharply, just go and buy them. Like for example, I like a name like a Timex or a Wanbury, which announced results yesterday. Timex announced good numbers 3 days ago, and the stock is down 20%. Now, I don't see it falling much. Clear disclosure, Prashant, I'm holding the stocks and I have no intent to sell. In fact, I'm planning to add to my holdings.
Okay, Timex is one of those ideas, but I mean, across the range of stocks, Mehraboon telling us that he's starting to nibble. We'll take a break. Rupen Rajguru is with us. Mehraboon, thank you very much for joining us in the program. Always a pleasure having you here. Rupen on markets, of course. He's head of equity, investment and strategy, and Julius Baer on the other side. Stay tuned.
Welcome back. Let's put the spotlight then on the top movers in the market this Friday afternoon. Harmis joins in. Harmis.
What a recovery that has been from the start of the trading session, and one stock that has contributed to that big time is ITC, and it has been the lead contributor to this nifty recovery and the subsequent up move. 4.5% higher now on the stock. At one point was up almost 5.5% as well. Double-digit gains seen for Godfrey Phillips as well in today's session. And take a look at the volumes at which the stock has gained. Almost 6 crore shares now have been traded on ITC in today's session. The 20-day average being close to 2 crore, so almost 3x its 20-day average. It'll be interesting to see the delivery volumes on Monday. Godfrey Phillips too, 60 lakh shares traded. The 20-day average is just 3.5 lakh shares, so substantially higher volumes for Godfrey Phillips, as is for ITC as well. A lot of positive earnings reactions that have transpired even despite the broader market pain that you're seeing, and MRF is now up 9% after its results. A very strong operating performance. LIC, you don't see a 7% surge very often on this stock, and despite this move, the stock is still below its IPO price. With Hitachi Energy too, 14% higher in today's session. And look at the volumes here. MRF is not a very heavily traded stock. It still has 50,000 shares being traded today. LIC has had 1.5 crore despite the lack of free float. Hitachi Energy too has seen almost 8 lakh shares being traded, almost 4x of its 20-day average. And lastly, Apollo Pipes is one name that's the top gainer on the small cap index today. It's 17% higher, the biggest single day gain in 9 months. The last time the stock gained this much was back in May of last year. And if you take a look at the volumes as well, it's gained in 3 out of the last 4 trading sessions. Volumes are the highest since January of 2018 in today's session. So at 7-year high volumes is Apollo Pipes. 30 lakh shares have been traded today. The 20-day average is just 60,000 shares. So significantly higher volumes. The stock is exactly at its 100-day moving average, which is at 309. The 200 DMA is still far off. It's still at 362, but at an important level is Apollo Pipes. But for the month of February, the last 10 years, positive returns in only 4 of those.
Okay, all right. Thank you very much, Harmas, for that. Rupen Rajguru is with us, Head of Equity Investment and Strategy at Julius Baer. Rupen, good to have you with us here. Thanks for joining us. The global screen perhaps is the one which is of a little bit of worry. I guess we can attribute the lack of follow-through after the India-US to the global screen. I don't know if that's the right thing to do, but I mean, it's very comfortably blame the global thing, the global shakeout or whatever you want to call it. What's your sense, Rupen? Will markets hold, sustain? Because so far, it's not. Perhaps it's a bit more steady, and the downward drift perhaps stops. 25,500 is a level. But what can we do on the upside, in your opinion?
Hi, afternoon, Prashant. So yes, day-to-day movements will be there, and it will be very difficult to track why anything is up or down. But if we just zoom out and look through that, India as a market has gone through a pretty, to some extent, painful period of consolidation, which is probably we are now on our 16th month. And typically, if I were to go by history, any correction or consolidation in Indian markets have typically been at around 1 to 1.5 years, so 12 to 18, 19 months. So we are probably there. I think one of the key reasons why the sentiment was had soured vis-a-vis Indian equity, particularly from an FPI community perspective, was because of the Indo-US trade deal, which was earlier expected to be happening as early as May of last year, and it probably didn't happen. And the world was beginning to think that whether we have our leverage vis-a-vis the US and all, whether it's waning and all those stuff. So finally, that is done and dusted. So at least that sentiment, which was negative, which to some extent was also impacting the currency, so that is now done, and hopefully from here on, we at least would have seen the intermediate bottom more so for currency at say 92 odd levels. We are probably at 90.5 as we speak. On the other hand, the fundamentals are on the mend. So we have been seeing that, also this our sentiment coincided with earnings growth deceleration. Our earnings growth declined, from a high double digit to as low as 7 to 8%. That is on the mend, and we believe that earnings growth next year would be around mid-teens. So at a margin, and market always looks into rate of change, so earnings are better. And also the sentiment is no longer as bad as what it was some time back. So hopefully other things remaining constant, if we don't get derated or re-rated, if we are able to deliver a mid-teens kind of an earnings growth over next 12 to 15 months, I think suffice to say we can expect such kind of return from the market itself.
So have you made an intermediate bottom in the markets also? The Sunday low perhaps post STT? And what are you buying now?
Yeah, hi, afternoon, Rima. So probably I don't follow technicals that closely, but assuming that probably Sunday was the day in which we hit the bottom from a sentiment perspective, right? Because at that point of time, we didn't have the US trade deal. Probably from an FPI perspective or a general market sentiment perspective, while per se budget was not as bad as what market indicated, but from a purely taxation perspective, the market saw a low of that mid or below 25,000 odd level or so. So at this point of time, I think I would strongly believe that would be the bottom for the market. And going ahead, we should also look into which segments would be the earnings leader. And the earnings leader definitely, the one of the key theme what we are looking into for this year is return or comeback of credit growth. So that should augur well for BFSI. That should augur well even for the NBFC. So that will be the leader for earnings growth. And in fact, in today's credit policy also, there was no rate cut. So probably we have also seen the bottoming of NIMs, and at a margin, we would see NIM improvement. So we expect a strong earnings growth for that segment going ahead over next 12 to 15 months. So that will be the leader. Also, the consumer side, while the results have been a mixed bag, but we believe that segment also has seen quite a bit of, I would say, underperformance. And that segment, and particularly premium consumption, is what we like. And that also should be the leader in this next leg of growth, which we would see in the market. So these are the two big segments, which is what we would like. And that is what we believe will drive the market going ahead.
Hi, Rupen. Good to see you in. Rupen, what's the view on tech? You're talking about it being a tactical play. What kind of tactic, though? Tactical buy after the correction?
Yeah, hi, afternoon, Nigel. So yes, for tech, now, for the tech companies, for like AI is, you love it, you hate it, but you can't ignore it. It's very clear. So they have to all wake up and, smell the coffee. Having said that, like famously, Mark Anderson had said software is going to eat the world. And now, at least the way things are, AI is actually eating the world. Yes, last 1 week, a lot have happened. And, a lot of analysis is gone through. So while if you ask me whether I'm an optimist or pessimist, I would say I'm an opportunist here because IT as a segment clearly is no longer a segment which earlier used to grow at around 8 to 10%. So that's no longer there. But having said that, it always provides opportunities. So I will be pessimistic at around 22 valuations PE, and I will be an optimist at around 17 to 18 PE valuation. So we have corrected, but we have not gone into that level. So from a pure market perspective, if the stocks were to correct further, say 10 odd percent, 12% or so, we clearly believe there is a tactical trading opportunity in the stock. So because news flow will be there and going ahead, we'll be having more and more of news flows. But some of the things, be it from the Palantir's perspective, even if they claim that something they can do it in 2 weeks, which otherwise would take 2 years, it might not be that realistic, and a lot of the things might be exaggerated, and they might not immediately impact them. And in fact, in day after the Cognizant results, also the commentary from the management there was pretty constructive. So there will be opportunities. And as I've said earlier in your channel, that when you get into that level of 17, 18 PE with a good FCF yield, unfortunately, they should be doing more of capex, and that's why they would have not got derated. But since they are not doing capex and they're giving it back to the shareholder, and now they will be doing more buybacks post the taxation change. So that will also provide a good floor for those companies. So around 17 odd P, a lot of the large companies on a 1 year forward basis would start to look pretty attractive.
Okay, all right. You want to hear this, Rupen? D Street chatter. And Nimesh gets us that every day. Nimesh, good afternoon. Finally, it's a Friday. Tuesday felt like a Friday. Wednesday felt like a Friday. But finally, here we are. A real Friday. So what's the mood and what are you picking up?
Prashant, a good recovery in the market, and that's been the theme this week, right? Especially in the broader markets. We've seen intraday recovery in virtually all those days and a bit of pullback as well. And even when the Nifty was down in the last couple of days, I've been saying this, that the momentum is shifting towards the broader market names, the small cap names, and that's playing out. Even from a flow perspective, that's been the change from the domestic mutual funds, a bit of shift from large caps to the small and mid caps. So that's the trend. Even in today's market, a good recovery in the broader market names. The mid cap index is virtually in the green, and so is the small cap index as well. The other big theme has been the big reactions to the earnings. Look at what has happened to Hitachi today. The street was short in the stock, and it's seen a 12-13% move. So is the case with LIC as well. A big valuation comfort for that stock as well. So a big reaction to those names as well. From a flow perspective, again, a day when I sense is that there is buying interest from larger FIs as well. So maybe you'll see a bit of a buy figure from the FIs, and that's slightly towards the metal names and some select PSU bank names. So bank index has done well, but within that, I believe it's the PSU banks which are well bid by institutions. FMCG is again up today, but that's largely to do with ITC, and we've seen what happened to all the cigarette names. All are buzzing in trade on the back of that price hike. But the big theme seems to be a recovery in the broader markets, and then that too backed by institutional buying.
Okay, absolutely. Now let's get to the stocks, Nimesh, in terms of what you're picking up and the chatter there.
Well, so the first stock is Bharti Airtel. The stock is buzzing in trade today. There is a con call as well at 2:30. But again, the sense is that maybe a large block will come very soon. Remember, the earnings are over. So in the next 48 hours from now, the promoter entity can sell. So the strategic investor is classified as promoter. So potentially a block is likely in Bharti Airtel very soon. So that's the first name. Second stock, this is interesting. Cartrade and Poly Medicure. In the last 2 days, we've seen massive sell-off in both those names. Cartrade in the last 2 days, I mean, today it's recovered. But in the last 2 days, the stock surprisingly was down 15-16%. And so is the case with Poly Medicure as well. Both the stocks are under pressure of late because I understand one long-only fund and FI has been an aggressive seller. Essentially, the feedback is that maybe there is a redemption pressure, and it's a common holding in both those stocks by that global fund, and hence you're seeing pressure on both those names. I guess Poly Medicure, even in today's market, is down 6-7%. The third name is Aditya Birla Real Estate. You've seen a massive fall in all the real estate names in the last 6-8 months, and so is the case with AB Real Estate as well. But in the last 2 days, there has been a very sharp recovery. The stock yesterday was up 10%, today is up 4%, largely because I understand the selling pressure from a domestic PMS is largely over, and hence you're seeing a bit of a pullback in that name. And the last name is PNB Housing. In the last couple of days, you've seen a bit of a reaction and a bit of recovery as well, largely because one domestic mutual fund has been accumulating PNB Housing at current levels. It's virtually come to one-time price to book, so a bit of buying is back from domestic funds in PNB Housing.
Thank you very much for that, Nimesh. We will slip into a break on that note. On the other side, we'll get you a few calls from our technical experts. Stay tuned.
Session. The Nifty is now at the day's high and the Nifty Bank as well. So pretty good going on that front. And as I mentioned earlier today, expect India to actually outperform from here on, given the underperformance that we have seen. We have taken support at closer around the 20-day MA on the Nifty and we have bounced back. But I think the biggest positive is that the advanced decline ratio has got a little bit romantic. I say that because they were very, very far away getting into the weekend. Now they're getting a little bit closer. Closer on 1,300 stocks are advancing in comparison to the number of stocks declining. Looks like they may kiss each other before we are done with today's trading session. Now, the PCR has moved up to around 0.97 odd. Remember, a few trading sessions ago, it had gone to around 0.7. So that's around holding around the 1 odd mark because the put writers, their game is on. 25,600 put. Just take a look at the premium. Down from 106 to around 66. 25,500 and 500 put. Out there, the premium has come down drastically. No, that's not the one we're talking about. 25,500 put. Let's get that up for you on the screen. It's come down from around 71 to around 41. And also the 25,700 call, well, you could have got the direction right. But the premium on that one has come down from around 120 to around 92. Telling you at around the 25,850 odd mark, the bears are going to come to fight back up because you've got the direction right with the Nifty being up 50 points, but still you're not making money. So clearly intense writing being seen at that level. Individual stocks, some of the stocks that actually got hit, they have come in for a bit of a short covering bounce in trade today. HUL, big move on the upside, open interest down, as is the case with Kotak Mahindra Bank as well. The stock had got slammed a couple of weeks ago. That one's up in today's trading session with the open interest lower. Nykaa, well, those numbers look quite good. So there are signs of some fresh buying as well as some shots that are covering on that name. While ITC, one of the biggest underperformers in the last 1 month or so, there are signs of fresh buying out here, both in terms of delivery as well as in the futures and option space on stock futures. 305, 310 appears to be the buy zone from a bullish perspective. So that's why that stock is up and about. Mitesh Thakur is back with us. Mitesh, give us a couple of trading ideas.
Trade looks like a good bet. It's a stock which is been extremely, going through extreme decline and now trying to reverse. So yesterday was a good move. Today is a consolidation candle, so we should most likely see continuation tomorrow. So 41.15 is the price cheapest target of 40.95. Look for target of 40.50, and the other one which I like, that's Torrent Power making a fresh swing high. It was a call earlier as well. That's a BTS with the stop below 14.20 for target of 14.65.
Thank you. Enjoy your weekend, Mitesh, if we don't speak again. Thank you once again. Let's talk about LIC that continues to build on gains following what was a strong quarter. Yash is now joining in. He's put together some interesting analysis to make sense of those numbers. Yash?
Well, for LIC, the numbers, no doubt, at the headline level were very strong. But we put together some numbers just to understand how the outcome of those strong numbers really happened in terms of the internals intersecting each other. And most importantly, this relates to the VNB performance, or the value of new business performance, and the margins, which are a derivation of that. So just looking at the margin breakdown to start this analysis with, the impact of business mix on the margin was about 2.6%. The impact of economic assumption on the margin was 1.9%. Now, economic assumption is essentially assumption related to yield curve, to external factors away from the business. Here, there was a positive surprise which came in, which impacted the margins positively by about 1.9%. Now, importantly, the impact of operating assumption on VNB. Essentially, this is to do with business itself, but of course, assumption on the VNB. Here, there was a negative implication of about minus 2.8%. The net improvement in VNB was about 1.7%. Essentially, what's good here is the improvement in the business margin on the back of more margin accretive business. That's certainly a positive for LIC. Now, importantly, what's not good, and it's important to talk about that as well, operating variance. As I said, the operating assumption was sharply negative, down 280 basis points for 9 months FY26 and over 500 basis points for the third quarter of FY26. Operating variance essentially reflects the gap between operating assumptions and what the outcome has been. The whole point of this analysis is to say that if not for that economic variance, the positive impact of 1.8%, if that wouldn't have come through, the margins for LIC in the quarter and for the 9 months would have been much lower. What this spells, in absence of positive impact of the yield curve and hence the economic variance, the margins, as I said, for LIC for the quarter and for 9 months could have been much lower.
Okay, all right. Thanks a lot for that, Yash. Thanks for breaking that down for us. Dharmesh Kant, Head Research at Chola Securities, joins us on the show. Hi, Dharmesh. Good to see you in. Any view on LIC?
Yeah, good afternoon, Nigel. Thanks for having me for the show. We have a positive view on LIC, and we have been recommending this for quite a while. Though stock prices have not moved up, I mean, we have been recommending at 900 levels. It's still out there after today's move. But fundamentally, I think this company merits attention out there just on the valuation comfort which it enjoys compared to your private sector peers. So, Yash has detailed out many of the factors out there, but some of the factors always play out in favor of company for the margins to be better. Going forward, I think Q4 also this will play out in favor of LIC, and Q4 is supposed to be the best quarter for any life insurance companies. In light of all the competition, they have been able to grow their retail EPA by 61%, which is a remarkable thing for LIC to do, seeing the size at which it sits around. And at the same time, your VNB has grown by around 31% with margins. I mean, 21% is there, but the management was sounding very confident that they will do a better margin in Q4 than what they did in Q3 and FY25. So I think net, given the fact that it still trades at 15 to 20% of the valuation multiples, which say HDFC Life or SBI Life or ICICI Pru Life enjoys, much enough elbow room out there for the stock price to see appreciation, say near to medium term. So we are a fundamental bias for 5 to 7 years kind of perspective for the portfolio bias, but even for trade, I think for next 2-3 months, if somebody is holding 10% kind of an upside from current levels is gettable.
Just a quick word on, we'll have numbers coming through from SBI and Tata Steel. SBI is tomorrow. And any thoughts on these two names?
See, Prashant, the SBI, I think the numbers will be usual around 10-11% kind of profitability growth with stable NPA ratios, which we have seen with the likes of all other companies. What I am looking forward to is the NIMS and the NIA growth for SBI. So how the outlook is there. And the other income, because other income segment for most of the public sector pays were not exactly in line with others. Some saw degrowth, some saw growth. So how SBI has spent out there would be the monitorables. So, but net, I think there would be any negative surprises out there. Tata Steel, we can see a positive surprise because the steel volume growth has been quite decent, and more than that will be the commentary because this January onwards we have seen price hikes in the domestic market. So how things are panning out there and in their European foray. So Tata Steel as a house we have not been recommending. We have always preferred JSW Steel in the ferrous space over Tata Steel.
Yeah. Stay with us. I kind of jumped the gun there, Dharmesh. We'll actually put out the previews on the other side of this quick commercial break as well. But good to get that view. 9 minutes to go for close. We're going to come back in just a bit. Those previews and more market coverage coming up.
Welcome back. Just one quick word on Keynes. That one has recovered considerably from the lows of the day. The reason is I'm looking at a Jefferies note. They're saying the stock trades at around 36 times, which is the 55% discount from the peak that we have seen. So that's about Keynes. Good recovery is what we're seeing. But the big number that we're looking forward to is SBI. Gaurav joins us to help us out with what to expect. Gaurav?
Well, as for SBI, if you look at loan book growth, it is expected to come better than most of the banks at 13% on a year-on-year basis. It will be in line with the system, and at the same time, deposit growth, it is likely to be around 10% on a year-on-year basis. As a result, if you look at net interest income, we are expecting 8% growth. Now, other income, that is likely to stay stable, and that is the reason why the PPOP, there may be some support to PPOP, which is the reason PPOP is expected to grow almost by 18 to 19% on a year-on-year basis. Now, when it comes to profit, the number is expected to grow just by 4% because remember, in third quarter of FY25, the provisions were very low because of the COVID account that SBI had back then, and that is the reason that provisions may see a sharp increase on a year-on-year basis. Apart from that, if you look at the net interest margins, they are likely to stay stable. Credit cost, as always, SBI has a pristine asset quality and they do not see any kind of stress in the asset quality even going further, and even analysts are not anticipating any stress going further for SBI. But what is likely to impact the stock is the commentary. Now, commentary on growth, that is something that we will be watching out for because remember, management earlier said that the growth will be in the range of 12 to 14%. Commentary on the asset quality, not just for SBI, but for the entire industry. The commentary from SBI actually is a very important thing to watch out for. And lastly, commentary on the margins, because today RBI has kept the repo rates unchanged. So let's see what SBI has to say about their margins going ahead.
Okay, all right. Gaurav, thank you very much. Yeah, we're absolutely right. I mean, the commentary is going to be the one to really watch out for as we come back. Dharmesh, on IT, do you have a strong view on where we go from here? I mean, this week's basically been a complete washout.
Yeah, Prashant, I mean, the difficulty with all the IT companies in general, basically SaaS platform companies would be to sustain whatever they are doing. I'm saying, I mean, this Anthropic thing may not play out immediately, but it's definitely out to be played out in some time. So maybe 9 months, 1 year down the line. So till here, we were talking about how much growth they can do, 3, 4, 5%. And now the talk would be whether they are able to sustain their present margins or not. So Orient Pro Solutions, we have been, tracking, and I have been recommending there. Yesterday, there was a con call out there and a couple of more IT companies con calls. The commentary from the management was very clear that they have to reimagine, restate, strategize the entire, product offering which they are having, and everything has to be AI built. So the challenge is there, and the expenses are going to mount. And secondly, as we all know, AI is deflationary in nature, so the margins will also get squeezed. So the challenge here with most of the IT companies would be now how to value them. So trading bounces here and there can still happen. But I think the currency depreciation tailwind is the only thing which has been, keeping them afloat. So from large cap and largely most of the SaaS players, we are out of it. The only stock which we have been recommending and holding till now has been Orient Pro Solutions, where I think a fair place there in the offing. 1,700 odd close of around order book is there. And management sounded very aggressive on the data center opportunity because by their own saying, they said that they have not imagined the type of opportunity which will come through 3 or 4 months back. So there, I think things are going to open up in a big way out there.
Product company, as you're saying, not a services company, so you believe it's well placed, though the stock has become half from the top that we saw, around 24 months or so ago. Thanks a lot, Dharmesh, for joining in and giving us all those views. By the way, just one quick word on Tata Steel, the numbers that will be expected later today. The key numbers you're looking forward to is the India EBITDA per ton at around 13,300 rupees, and Europe is expected to deliver a loss of around $12 per ton. Well, let's wind down the markets then for you. Today was in fact that sort of a day. You had a couple of names that did, big move in today's trading session. Case in point being a Keynes. That stock was down 5%. It ended higher in today's trading session. So good move is what we saw. Data patterns, the stock did splendidly well. Up and about. Nykaa as well was a stock that went home with solid gains. And ITC and Godfrey Phillips, smoking is injurious to health. But for those that held the share, they would be quite happy in today's trading session. So good move is what we saw on both those two names. Number of stocks declining were far more than the number of stocks advancing. But the real story was actually that the crisscross lines got closer to each other by the time we wound up. Net, India outperformed this week. India outperformed today. And hopefully that's going to be the trend that we'll see for the remainder of this year, because 2025, we were lagging behind. We'll wrap up on this edition of Closing Bell. Don't go anywhere. The editors are waiting on Editors Roundtable. Stay tuned.